Hello investors, welcome back to your number one place for all your investing needs. If you're new to the channel, I make videos about dividend investing, growth investing, penny stocks, and hot stocks. In today's video, we're going to be covering the stock XPENG, which is a Chinese electric vehicle company that is currently on fire. We will compare XPENG with EV companies such as NIO and also Tesla. We will discuss the delivery numbers for XPENG, future potential, and if the stock is currently a buy or if the stock is undervalued or overvalued, in my opinion. If this topic interests you, sit back, relax, and smash that like button. I challenge you guys to get 100 plus likes on this video. Also, go ahead and subscribe to the channel and turn on that bell notification so you get notified every time I make a new video. We're aiming for 10,000 subscribers by the end of the year, so let's try to get that. And also, leave a comment below. Do you own XPENG or not? And what do you guys think about them compared to NIO and Tesla? Also, don't forget, link in the description. Get your 2 free stocks when you sign up for Webull. Alright guys, so if you guys are not familiar with XPENG, we're going to take a look real quick at what they have and what they have to offer pretty much. So the first thing is they have 2 different models. So their first model is going to be the G3 super long range smart SUV. And if we take a look right here, they show you guys all the specs and what everything that they have down here, the price, the price on depending on the version, and just a few things down here you can see. As you can see all the photos, the car looks nice. I mean, honestly, I would definitely drive one of these. And then obviously the second model they have is going to be a P7 intelligent electric sedan with internet DNA. So if we take a look at this one looks even nicer. This one actually kind of reminds me, of a Tesla. The way it looks, the design of it is just beautiful. I would definitely buy one of these as well. I mean, if you just take a look, I mean, that car just looks, aesthetic. So I would definitely get one of these. They look great. But yeah, so they have 2 models, guys, and now let's take a look at their price range. So XPENG, also the ticker symbol is XPEV, XPEV. So this stock in the past week, it was trading down here at $21, went up here to a high of about 20 or $39.32, maybe a little bit higher than that. Obviously, we made a little pullback on Friday. But if you guys take a look in the past 3 months, obviously, when the stock started trading, it was down here about $18, $19. So it's almost made about 100% gain already. And the stock does not seem like it's going to stop. As well as NIO. NIO has been exploding as well. And a lot of these other Chinese EV companies are also doing very, very well. Now, if we take a look at this article right here, NIO and XPENG are Wall Street's favorite Chinese EV stocks. NIO and XPENG are the biggest potential winners among the U.S. listed Chinese electric vehicle makers, according to Citigroup, which weighed in on the stocks on Wednesday. Citi analyst Jeff Chung raised his NIO price target to $46.60 from $33.20, keeping his buy rating on the stock. The target is the highest on Wall Street and is 23% above Wednesday's closing price of $37.71. Now let's skip NIO since we've already discussed that in previous videos. Chung also launched coverage of Li Auto and XPENG. He rates Li Hold and has a $27 price range on the shares. That's about 7% higher than recent levels. He rates XPENG at a buy and has a $34.70 price target for shares. That's about 28% higher than recent levels. XPENG shot up about 23% on Wednesday, which is beautiful. So Chung's view aligned closely with those of his peers. XPENG overall appears to be the street's favorite Chinese EV stock. About 85% of analysts cover the stock rate it at a buy, well above the 58% average buy rating for stocks in the Dow Jones Industrial Average. The analyst average target for the stock price is roughly $26, about 20% above the recent levels. Now, obviously, it is clear that these analysts like the Chinese EV sector despite how rapid the shares have risen in the recent years, especially in the recent months. EV stocks Barron tracks are up more than 360% on average so far in 2020. Over the past month, those EV stocks are up 1.7% on average, better than comparable returns of the S&P 500 and Dow Jones. But the performance of this group varies widely over the past month. Obviously, you guys know the truck company Hyliion is down about 46%, while NIO shares have gained over 75%. Trading has been very, very wild. All right, the next thing we're going to be looking at right now is going to be XPENG announces vehicle delivery results for the month of October 2020. So XPENG delivered 3,040 vehicles in October 2020, which is about 229% increase year over year. And then XPENG delivered 17,117 vehicles year to date in 2020, which is about a 64% increase year over year. XPENG delivered a total of 3,040 smart EVs in October 2020, consisting of 2,104 P7s, the company's smart sports sedan, which we showed in the beginning of the video, and 936 G3s, its smart compact SUV. The company's October deliveries represented a 229% increase year over year. So both of those cars I showed you guys at the beginning of the video, as you guys can see, that the sporty sedan was actually a lot more popular compared to the SUV, which in my opinion, I agree. I like the sedan a lot more. It looked very, very aesthetic. As we just said, as of October 31st, 2020, year-to-date deliveries are reached about 17,117 units. Despite China's Golden Week holiday in early October, which affected deliveries, the company sees strong business momentum supported by fast production ramp-up and robust demand for the smart EVs. It's achieved a new milestone this month, completing the production of 10,000 P7s on October 20th, 2020, just 160 days after starting mass production late in May. So, as they're picking up the speed on this is huge. Just imagine what they're going to be doing, in a few years. XPENG is a leading Chinese smart electric vehicle company that designs, develops, manufactures, and markets smart EVs that appeal to the large and growing base of technology-savvy middle-class consumers in China. Its mission is to drive smart EV transformation with technology and data, shaping the mobility experience of the future. In order to optimize its customers' mobility experience, XPENG develops in-house its full-stack autonomous driving technology and in-car intelligent operating system, as well as core vehicle systems including powertrain and electrification electronic architecture. XPENG is headquartered in Guangzhou, China, which with offices in Beijing, Shanghai, Silicon Valley, and San Diego. The company's smart EVs are manufactured at plants in Zhengjing and Zhengzhou, located in Guangdong and Henan provinces. Now, let's do a little bit of a comparison right here. So like NIO, like Tesla, XPENG is another parabolic EV with future potential and a hefty valuation. So here's a summary. XPEV posted strong October deliveries. Obviously, so did NIO, if you guys are following, building on strong momentum established in Q3. As production capacity scales higher, a rolling 12-month forward revenue projected of RMB 10.0 B or USD 1.49 billion by Q3 21 seems feasible. NEV adoption remains a pillar for the Chinese government, leaving large rooms for growth in a highly competitive, fragmented market. The G3 and P7 are comparable specification features while boasting longer ranges and lower prices than foreign imports. While shares in XPENG hadn't moved much since debuting in late August until a parabolic rise to start November, the EV startup has seen some strong steps forward in delivery numbers as it continues to ramp up production. As China continues to push EV adoption higher, XPENG could continue to find success through maintenance of this rapid production and growth in deliveries, even though competitive forces, do exist within Tesla, Chinese startup NIO, Li Auto, as well as legacy makes like BYD. The fragmented market does leave market shares to be gained. Now, something with China that just, is amazing, and the Chinese government continues to push EV adoption with a new plan to have NEV sales at 20% of new car sales by 2025, down from the previous 25%. It is still quite a rapid rise to the 5% that NEV holds today. BEVs are just one subset of NEV, yet sales and market shares growth across all types of NEV, BEV, PHEV, HFCV will be necessary to meet that goal. Hence, the large annual production capacities as well as continuing scaling of deliveries are key to maintain market price, while Tesla and BYD have a fair share of the market. Year-to-date, 12% for Tesla due to the Model 3, 12% for BYD's top 6 selling models. Still, there's so much, more room for XPENG as well as others to gain share. Take Wuling, which had the best selling vehicle by volume for September. And then it just compares, like we said, XPENG's P7 was the 14th best selling vehicle on the list for September, with 2,573 P7s of the total of 3,478 XPENG deliveries in its record month. That's also marked the end of Q3, like we said, with about 8,578 vehicles year to date. Now, if you guys take a look at this chart right here, this is going to be the production capacity expansion is important as the G3 and P7 target the mid to high end price market, which remains the largest sub-segment in EV sales in China. So this is China PV sales volume by price segment, and then China EV sales volume by price segment. And down here, if we take a look, it's the 2019A, 2020E, to 2021, to 20. This is the future that they're having right there. And then down here, the mid to high end segment, which ranges from RMB 150,000 to RMB 300,000, accounted for 47.2% of total EV sales volume for 2019, and is expected to remain the largest market, rising to an estimated 1.8 million units per year by 2025. However, that figure is not set in stone, as is subject to change based on regulatory changes, tax exemptions and credits, and the pace of adoption. The target price range does look to offer the best room for growth, especially considering the features and price related to comparative models. The G3 is XPENG's lower priced model, a four-door SUV. As you guys saw, that's why I got more products out. And then if you compare it with the other ones, they are a little bit more on the price. If we take a look down here, this is going to be telling you everything. So right here, XPENG G3, Audi, BYD, Toyota C, and then this Toyota. Down here, the P7 is XPENG's higher priced model, a four-door sports sedan, which we also discussed, and it had a little bit less sales than the other one. And then if we take a look down here, it compares it with the XPENG P7. It has the Tesla Model 3, BYD Han, Mercedes-Benz, BMW iX3, and the Audi A4. So it compares them, the features that they have down here as well. Having the two models compete with the other EVs for the top of the line specs and features while offering a longer range per change allows XPENG to compete with foreign imports based on price. However, it will still face stiff competition from makers like BYD that have access to similar subsidies and similar manufacturing labor costs, such as the BYD Han, which has lower midpoint MSRP than the P7. Price competition might gain traction as subsidy allotments change. The 2020 subsidy circular had in principle that the subsidies for NEV purchased from 2020 to 2022 will generally be lowered by 10, 20, 30%. So we'll see how that all works out for us. Now, if you guys take a quick look right here, this is going to be their supercharging stations for their vehicles. So they have some nice options. So supercharging supports peak rates of up to 120 kilowatts, smart lock for reservation, up to 2-hour free parking. If we take a look down here, they have home charging piles, free installation, charging status monitoring, urgent repair services. And then right here, third-party charging networks. So this is their map. XPENG users have access to over 200,000 third-party charging piles located in major cities adjacent to main roads via XPENG Motors app. So 200,000, charging stations, and they seem to be all over the place, especially right here in this area. They're a little bit more spread out over here, so you might have a harder time. But if you live down here in the center, you're going to be doing very, very well and easily find one. Now, if we take a look right here, against the backdrop of the steadily deteriorating U.S.-China relationship, XPENG debuted obviously in August 27, 2020, and the stock popped about 40% on the day of the event as the surge in demand resulted in the Alibaba-backed Baba company. So Alibaba obviously is backing them up, raising about 1.5 billion against the earlier estimate of about 1 billion. So they, a 50% increase. So obviously Alibaba Group Holding Limited and its subsidiary Taobao China Holding Limited own 191,918,464 Class A ordinary shares, which is 13.3% of all outstanding ordinary shares and 19% of all Class A ordinary shares per the Scheduled 13D filing with the SEC on August 26, 2020. So if we take a look right here, the capacity growth. So the company currently has 2 operational manufacturing plants, one self-owned and one contracted, with a combined capacity of about 250,000 cars per year. It also had a network of charging piles numbering well over 200,000 as of June 30th, 2020, which we obviously just discussed. Through its subsidiary Guangzhou XPENG Motors Technology, the company recently announced the construction of a new facility at the Guangzhou Economic and Technology Development Zone, which will be financed by Guangzhou Jet Investing Holdings to the amount of RMB 4 billion, or approximately about 600 million in US dollars. Construction of the SEMB is expected to begin on or before December 31st, 2020, so by the end of the year, per the corporation agreement. The planned capacity for the new plant is expected to significantly expand the company's production capacity. While the exact planned capacity for the plant is currently unknown, it should it should give XPENG a great deal of supply flexibility as it grows its China market and explores opportunities overseas. The current delivery run rate is in the neighborhood of about 25 to 30,000 deliveries per annum, give or take, and the production capacity is already at 8 times to 10 times with the self-owned and contracted plants. Adding a new plant will give the company an even greater production buffer to launch in the new markets and price segments within and outside of China. So as of June 30th, 2020, the company reported holding cash and cash equivalents of about 150 million and restricted cash of 118 million on the pro forma basis. Total debt, which includes short-term and long-term borrowing, and the current portion of long-term borrowing, totaled 287 million for the 6 months ending June 30th. The company reported 142 million in total revenue. Gross loss was reported at 5 million. Operating loss was 202 million. A net loss of about 113 million was reported for the period. Per the August IPO prospectus filed with the SEC on August 28th, the company recorded 2.48 billion in cash and cash equivalents on a pro forma adjusted basis. For now, the company says its reserves will be sufficient to meet our anticipated working capital requirement, including capital expenditures in the ordinary courses of business for the next 12 months. The company is far from becoming profitable, and that's not something investors should expect in the near term. Net cash is used in operating activities was recorded at negative 171.6 million for the 6 months ending in June 30th, 2020. For future growth, the company may take the equity financing route to avoid putting additional pressure on its negative operating cash flow as it grows towards profitability. So guys, after reviewing all of that information pretty much and covering pretty much what XPENG is, what they do, the two models that they own, and the future of their company and what they have in store, how much cash balance they have, listing, and what they're going to be spending, do I believe that XPENG is a buy or sell? Personally, I think it could have some potential. So in my opinion, XPENG and NIO are two of my favorite Chinese EV companies, obviously. In America, obviously, Tesla is my number one pick, but NIO and XPENG, I think, have a very, very bright future, especially, with all the growth they're going to be having and the way, China moves. They're very, very quick. As you guys can see, they're already expanding, and they're going to be, able to produce even more vehicles. And that will definitely bring in more and more investors into the company and making them more revenue, which means more profit that they can reinvest back into the company as well. So personally, I do not own any stock of XPENG currently, but I might be buying some in the near future if we get a nice little dip. I'm hoping for a little bit of a pullback, and that way I can, build up a position on XPENG and see what we have to offer, as the company is very, very brand new, only a few months old, that has been trading on the market. NIO is a little bit more safer for me, and that's why I own NIO shares, but XPENG is definitely one that I'm going to be keeping an eye on, continue to follow the news on it, and see how I can build up a position at a certain price range, somewhere in the 30s, obviously. I would not want to buy a little bit higher, at least for right now, until we see some more data from them and see some more, revenue and just how they're moving in their production and stuff. So what do you guys think about XPENG? Do you guys think it's a buy or sell? Leave a comment below. Let's discuss. I want to discuss with you guys. So if you guys think that it's a buy or sell, leave a comment below. If I missed any topics or any points on it, leave a comment below as well. Make sure you smash that like button. I challenge you guys to get over 100 plus likes on this video. Subscribe to the channel for more content like this. I always discuss, hot stocks, penny stocks, EV makers. So you guys, if you guys are interested, stay tuned with that, and I'll see you guys next time. Goodbye.